Welcome to Trading Lounge and the US Tech Stocks, and I normally look at all the intraday stuff in this video, but because the markets have dropped, I want to just take a look at the daily chart for most of the tech stocks. We're also going to have a look at the S&P and the Nasdaq straight up as well, but I just want to bring our attention to Amazon as an example. There's stocks that we could count to the upside as 1, 2, 3, 4, and 5 to the upside and have a top in, and people are talking about a bear market and so on. So I don't think that's the case. We may have just taken out the top here, but as a particular move to the upside, whichever way you look at this, even if you looked at it as 1, 2, 3, 4, 5 up here, then it's still an impulse wave, so it would have a correction and then it would move further up to the upside. So counting it as 5 waves to the upside I think is incorrect. However, at the same time, obviously some markets have taken out the top here, some are just under the top here, and some are at them, and so on. So, there will be, a market moving through old highs is always problematic, and we'll see corrective patterns and so on. So I don't think this is the right case. So what I'm trying to do is if we go to the S&P here, that was a weekly chart we just looked at, and this is a daily chart here. So with the daily chart here for the S&P, and the Nasdaq, what I'm trying to do, and even Bitcoin as well, basically is in the same degree of wave 4 as well. So I'm going to look at this as in a practical way, as going step by step through the counts. And the first step that we need to look at is look at the move down here as a corrective pattern. We can see a rotation in the coming in the markets, coming out of tech stocks into, well, I see that the mining and the banking is actually quite sturdy. So I wonder if that's the rotation at this particular point. And also too, just good portfolio management. You'll see that a lot of folks that run portfolios will be taking 20% off the top and having a bit of powder to buy the dip and those sort of things. So I'm looking at the Nasdaq and the S&P as 1 and 2 and 1 and 2, and this intermediate wave 3 up here, and then wave 4 here. So from wave 2 to wave 3 here, coming back to the 38.2%. So let's just say 4,800 here for the time being. And during the week, we'll start peeling this off into our normal intraday counts. But we're looking at some type of wave 4 here, and this will be the same for the Nasdaq as well. Now, I've brought the Nasdaq into the wave 4 here as well, and the 38.2% retracement levels are top of this wave 3 over here. So in this case here, 1 and 2 and 1 and 2 and 1 and 2, and there's a nice 5 waves in here for 3, 4, and coming up for 5 here. So yeah, the thing with corrective patterns is that there's parts of them that we, on an intraday basis, that we understand, but in a bigger picture like this wave 4 that we could be possibly moving into, is that there are a dozen different types of patterns that they could play out to be. So we don't have to make decisions about it's going to be this or it's going to be this one or this one or this one. We just need to understand certain parts of it, and we could look to do some shorting in all of this. And as the correction matures, then you kind of get a better feel for what we're actually looking at. The other thing with corrections too that I could just sort of point out here is that if a market's been moving up here, it's normally the wave A. That's not always the case, but I find it a lot, is that the wave A is the sharpest. People panic, stops get taken out, all of those sort of things, and then we'll see wave C on a bit more of an angle. So we'll be looking for personality of the structures as well. So for the S&P and the Nasdaq to be wave 4s over here, then it would make sense that these tech stocks would also be pretty much the same as well. Well, let's say that they would be roughly the same if they came from the October, November lows here. Okay, because some of the markets have started earlier this, and some markets are quite later, like like the bank, like BAC, the Bank of America. So yeah, so that's sort of it in a bit of a nutshell. So we're going to go through and have a look. So if we start, we've been starting with Apple. So Apple's been a little bit different. Now, Apple's always been the core of the markets, has been leading and all the rest of it. And because it's been in a correction, we'll say, oh no, it's finished, it's done. You know, it's not leading anymore. But in a funny way, it could be leading. You know, if we look at this here as 1, 2, 3, 4, 5 up here, which would be sort of logical. And then we need to look at this as an ABC. The only thing that I'm unsure of over here, because this little move in here from this wave to here is 1, 2, 3, and then an ABC for 4, and then down for 5 here. It could be possible that this is a low in place here for this wave 5 here. I don't think it's the case though, as I've been sort of harping on about. I think we'll get something, doesn't have to be as complicated as the previous one, but it'll be something like this. And when this gets into this position here, then all of this up here would be wave 1 with a wave 2 coming back at that point. So that's what we're working through with this particular market. So we're going to go into Amazon. We're just going to be looking at the daily charts just to get a bit of an idea. So in this instance here, I've got 1 and 2 and 1 and 2 and 3 and 4, and 38.2% is ready to cover that gap over here. Not that that gap's important, but it's just roughly where the 38.2% retracement is. So we'll spend the week of diving in here and looking at how that sort of plays out at that point. Now, nothing's in a straight line, of course, but yeah, we'll see that there. And Nvidia as well. I also want to drag this into the same count as well, because it's got the same low here. So this will be 1 and 2 here, and 1 and 2 here, and 1 and 2 and 3 and 4. It actually looks a little bit odd, but it actually counts quite nice. So we can expect it back at around the 650 area. So we'll see how that plays out. I mean, we can see that most of these markets have come down on strong volume. So you could just short it here and put the stop above the high there if you wish in that case. But today is just really looking at the counts and getting some sort of idea. So we'll look at this as 1, 2, 3, 4, 5 coming down here. It's an A and a B and a C wave. It can be down here. So it could be simple. Now this correction actually started before many of the other markets. So this one is probably likely to lead and finish first and lead off from that point. And then we look at Meta is next, and we're also going to bring this into the same fold as well. So a bit of a long shot this one, but 1 and 2 here, and 1 and 2, 1 and 2, 1 and 2, 3, 4, 5 for third, fourth, and then 5 waves up here for this. So this one here, it's kind of you know, sitting at the 500 here, and it's kind of, this little pattern here tells me that it's sort of rejected it at the moment. I can see there's some support coming on the close there. I don't know if I've got this on actually aftermarket trading. I think I need to be on the intraday for that, I think, but sometimes I think I see it posted over here. So, but anyway, these prices could be a little bit lower. But anyway, for Meta Platforms, we're looking down around the 430 area. We'll just see how it lets go of that, and then we come over to Netflix. And Netflix, one of these markets that is a little bit different, and Tesla's a little bit different as well, and there'll be many others. So this one didn't start in the October-November run here. This one started earlier here. And one of the things here is I always sort of wonder about this here, if I should actually call this wave 1 and 2 in here. It is lower than this one. So that's always been a bit of an issue, but the rest of it sort of is okay. And in this case, I put it as 1 and 2 here, and 1 and 2 here. So in this case, we can expect it back down at the 500 area here for this. It's obviously in free fall at the moment. And Yeah, so that's that, and then we come to Google and then Microsoft. So with Google here, also slightly different as well, but it just counts. I've got to kind of go with the count a little bit as well here, in that I've got 1 and 2 and 1 and 2, and then from wave 2 here we've got nice 1 2 3 4 1 2 3 4 5 for the third wave, ABC for the fourth wave here. I could squeeze the fifth wave in here for this. I could do that and look at that a little bit differently. In this instance here, I could put wave 5 top in here, and that would be a bigger correction, but I don't think that's the case. I think I need to push this up here further and look at this as 1 and 2, which we have been looking at here. And this market hasn't really reacted that much, but all we need to do here is buy new highs. We've got a long position down here that we're sort of toying with, but yeah, we just need to buy new highs here. So we'll see. We'll look at that on the intraday basis. So this one is a little bit different. So maybe I've got to do some more work on that. Microsoft, I can just drag into the or to the S&P count really as 1 and 2 and 1 and 2. And 1 and 2 here, nice little 5 waves here, nice little 5 waves here, nice correction here, a bit big for this wave 2, I understand that. And yeah, 1 2 3 4 and all the way up 4 5 here. So we can expect this down at the 350 sort of area. But that said, there is, you know, it hasn't let go of this level here yet, you know. So for it to let go, it basically needs to come down here. There'll be some sort of bounce or whatever. It needs to have the first low below the level and then take that low out here. So it's a long way from being down here just yet, and it may not get here either. So we'll just see, but we're definitely in some type of correction that's not completed yet, so we don't have to concern ourselves with it too much. So I see this situation as a, you know, as a buying opportunity coming. When will that be sort of be ready? Well, there's a lot of financial fundamental sort of information out there that could take us into you know, late June really for this. It just depends on how complicated these wave 4s are going to get. So we could be here for, was it now, April 20th, 21. So yeah, all of May, June. Yeah, I don't want to call it too early, but it's somewhere in that Juney period there. Okay, so, and then we come to Tesla. The banks are a little bit different. We'll talk about those tomorrow in the next video. They're holding up quite well. So with Tesla here, we're just simply looking at this as the A wave here, the B wave here, and yeah, and a move down, coming down here really. Now the only, I've got this here as 1 here, and then an A and a B and a C wave here, because it kind of counts quite nicely. But if I've made a mistake, then this needs to be over here for that, and we'll have an extra wave in. But we'll work on that. We've got time. And this 1s and 2s normally show up once you understand the third wave, because the third wave, the third of the third, where we are now, once that plays out, then you can kind of easily see what needs to be done to finish off. But basically, I think Tesla will be a, you know, reasonable buy just below the 100. I think they're laying off staff at the moment, so that's a good thing. And there's always a silver lining with everything. They, you know, it's obviously a bad sign, you know, for the EV market, and but at the same time, it's cost savings. I remember Meta Platforms doing this as well, managing their own internal risk, you know, at its lows at $100 as well, and I thought that was a good buy at 100. So yeah, when the doom and gloom has taken over, then that's the time to buy. So that's it in a bit of a nutshell. So I'll leave it at that, and in the next video we'll look at things on an intraday basis, but I thought it would be good just to have a look at the bigger picture for a moment. Alrighty, cheers.